Hi there, I'm Ross Woodfield. Welcome to Blackwell Global's Daily Market Update. Leading news stories over the weekend was, of course, the US non-farm payrolls. The result came in at 223,000 jobs added in April, just short of what the market was expecting at 224,000. The results saw a little volatility in most pairs, but the direction was lacking. The result confirms that the disappointing March NFP report was a one-off, with the US unemployment rate drifting lower to 5.4% as expected. Looking now at China, and inflation figures were released on Saturday, and they were a bit of a disappointment to the market. Headline CPI came in at 1.5% year on year, while the market expected 1.6%. The PPI also disappointed at negative 4.6% versus negative 4.5% expected. China responded to the disappointing figures by reducing its interest rate by 0.25%. The PBOC said in a statement that the move would support the healthy development of the economy. And this is the third rate cut we've seen since November, and we could see more if the data continues to disappoint. Moving on now to the Canadian dollar, and it was a little volatile on Friday night thanks to the plethora of employment data. The Canadian unemployment rate was released at the same time as US data and came in better than expected at 6.8%. The employment change figure was a big disappointment at negative 19.7k versus the plus 28.7k the market was looking for. The Canadian economy has been shaken recently by the drop in crude prices, but this result shows that it may not be as bad as expected. And finally today, looking at those crude prices, we saw a slight lift in the WTI June futures to close the week at $59.39 a barrel. The market has climbed recently on figures showing the number of rigs in the US is falling, but the oversupply is there still fundamentally. Iran will have a big impact on supply if sanctions are lifted on them in the months ahead, and that could lead to weaker crude prices. And that's all we have time for today. For Blackwell Global, I'm Ross Woodfield. Thanks for watching.